Hi guys, let's start our first section, that is external financial reporting decisions. So in part 1 section A, we are going to talk about purely accounting, to be very simple, right? So in your plus 1 plus 2 you must have already studied about journal, ledger, trial balance, P&L, balance sheet, all these things. So your first section, external financial reporting decisions. So first let's try to understand what is the purpose of this section. Okay, so if you see the wording carefully, it talks about financial reporting. Some decisions need to be taken about financial reporting. That is okay, nothing critical as such there. It is about taking decisions. Which decisions? Relating to financial reporting. So financial reporting means what? Preparing the financial reports, in short. Okay, that is easy to understand. Then why is it called external financial reporting? That is the critical word for us to understand. So if you recollect your basics, the purpose of financial statements or the purpose of preparing the books of accounts is to have an overview about the business and understand what has actually happened in financial terms, right? So now when a company starts its operations and runs for a particular period of time, they need to prepare the financial statements so that they can issue these financial statements to the shareholders and the other stakeholders in the company. Sir, what is the difference between stakeholders and shareholders? If you are unaware of that, I have covered that in detail in section B as an introduction to corporate, the structure and all that stuff. You can refer back there. So in short, if I have to recap, so when you talk about a company, there are mainly two categories of the people who are critical for the company. Who are those? The first one is the shareholders of the company, and the other one is the board of directors of the company, the directors, right? So shareholders are the owners of the company, whereas board of directors are the the managers of the company, you can call it as, or else you can call them as the what is it, the stewards. Okay, so basically stewards. So they run the company on behalf of the shareholders for the benefit of shareholders. The real owners of the company are always the shareholders only. The board of directors only run the company so that the shareholders money is properly used. Sir, why can't the shareholders run the company themselves? Because there are lakhs and crores of shareholders or millions and billions of shareholders in a company. So for example, if I take Meta Inc, or if I take Amazon, or if I take Reliance or any other company, there are millions of shareholders in each company. Sir, imagine them coming together and trying to take a decision. It doesn't work, right? So they delegate this power. They appoint some people called board of directors and delegate the power to run the company to this directors. So directors will run the company, right? So now, see, I'm also a director in a software company. I'm the general manager and the director of a company, but I'm not a shareholder. So if a company makes $1 million profit, I get nothing. I get zero. I get only my fixed remuneration, director's remuneration or salary, whatever you are calling it. So I don't, as a director, we don't have right to, a part of the profit or anything like that. We are just running the company on behalf of the shareholders. Shareholders will get all the profits, and if company runs into losses, we still get our salary. Shareholders will lose their money. So the risk and reward are with the shareholders. The directors don't get anything as such, only their fixed remuneration, whatever is allowed as per the articles of the company. Okay, cool. Let's not deviate our discussion. Let's come back. So now these directors have run the company for the shareholders. Now the shareholders need to know what did the directors do with our money for this period. How did they run the company? Were they profitable or were they running into losses? Were the operating decisions properly taken or not? So all these decisions have to be clearly understood. So how does the shareholders understand whether everything is running properly or not? So for that only, the board of directors will prepare the financial statements, right? So the board of directors will now prepare the financial statements, and these financial, the name itself is very specific, financial, only monetary related items are covered. Sir, what about non-monetary like employees hiring and firing and new officers, etc., etc.? They are not covered in financial statements. Financial means only monetary, right? Money measurement concept. Only those transactions which can be measured in terms of money can be recorded in the books of accounts. Plus one accounting. What is it called? Conventions or something. I don't exactly. Yeah, accounting conventions. So go back and refer to that. So now the financial statements are prepared by the board of directors so that these will be issued to the shareholders. So the shareholders get a copy of the financial statements. Okay. So who else get a copy of this financial statements? So basically, let's keep it simple. The financial statements are presented on their websites of the listed companies. So if I go to amazon.com, if I go to Meta, or if I go to Reliance, or if I go to Infosys, Wipro, TCS, Tech Mahindra, Tata Motors, or any other company for that matter, Netflix or whatever. So I go to any company website, I can download their financial statements. So now, who all can access the financial statements? Literally anyone can access the financial statements. That is why it is called external financial statements, right? I hope you understood why it is called external financial statements now. Okay, let's see. Now, what is covered in this particular section? You can see the section introduces the key principles and standards. There are accounting standards which are defined to explain the user how to prepare the financial statements. So they govern the financial accounting and the external reporting. It covers this is the important one, preparation and the interpretation. So how do you read the financial statements and how do you prepare the financial statements? Essential for communicating the company's health to the external stakeholders. Sir, who are external stakeholders? Investors, shareholders, creditors, lenders, whoever gave money to the company, regulators, your SEBI, Security Exchange Board of India, or else in case of a US company, you have your SEC, Security Exchange Commission, or your income tax departments, your Uncle Sam in US. So there are so many regulatory authorities that we deal with. So your tax authorities and all that stuff. So yeah, you get the idea. Now, financial statements are issued to everybody. Anybody can access from the websites of the listed companies. Sir, what about unlisted companies which are not publicly traded? Listed means publicly traded on the stock exchange. So what about unlisted or not publicly traded companies? So those are with the company, you have to go and request the company to send you the copy of financial statements. They'll send you. Sir, what if I'm a shareholder in a private company, unlisted company? You will get a copy from the board of directors. They'll send you via email or hard copy or whatever it is. Okay, sir, what if I as a public want a copy of the latest financial statements of a private company? I'm not a shareholder. Can I get access to the financial statements of a private company? It's a little tricky. Technically you can't get access to the financial statements unless you make a request to the company and the company voluntarily discloses it, or in case of an Indian company, there is something called MCA, Ministry of Corporate Affairs. So you can pay some fee. I remember 100 or 120 rupees, not exactly sure. So you can pay that and some public documents are released. Annual return, some part of the financial statements are there, not everything. So anyways, it's a little tricky. If you want to have access to financial statements of a private limited company without being a shareholder, it's little tricky. But yeah, rest otherwise they are external financial statements. So now, how do we prepare the financial statements? There is something called as a framework. Sir, framework means what? Say something that defines what are assets, what are liabilities, what is equity, what is revenue, what is an expenditure, how should they be recorded, what are their definitions, what are their classifications, current versus non-current. So all that is defined in something called as a framework. Okay, so technically speaking, this framework can change from country to country. Correct? Every country can have its own different framework as such. So for that reason, what happens is, I'm talking about reporting frameworks. Okay, so financial reporting frameworks. In your US CMA syllabus, you have two main financial reporting framework syllabuses. What are those? Obviously, the one which is followed in US, which is called as US GAAP, United States generally accepted accounting policies. And then you also have something called IFRS, right? So international financial reporting standards. So IFRS is followed in 180 plus countries basically, but again, followed as in does not mean they directly adopt the IFRS as such. They use the IFRS as a framework, and based on that they make some additions and subtractions. Like for example, in India we follow something called uh, Indian AS, Indian Accounting Standards. In short, they are called as IND-AS, IND-AS. Okay, so what is IND-AS, sir? Very simple. You take IFRS and you make some plus and minus. Plus means additions, minus means subtractions. So plus are called as carve in, means something that is added in, and minus means obviously you understood by now, it is called as carve out. Something which is not suitable for the Indian economy, those will be removed from the standards. Simple. Okay, anyways, so we have US GAAP and you have IFRS. US GAAP is purely followed in the US, whereas IFRS is followed across the globe. Again, when I say across the globe, not all countries follow IFRS exactly as such. Some countries make certain modifications as they deem fit. Okay, so I stands for international there, so that is your idea. So now in section A you can see accounting standards, GAAP, US GAAP and IFRS. So transparency and compliance with the rules and regulations, all that stuff. So what do we learn exactly in section A? So IMA divides section A into two units. What are those? The first unit talks about financial statements, and the second unit talks about recognition, measurement, valuation and disclosure. Okay, so section A, first unit A1 talks about statements. What are the five financial statements? Okay, you have your profit and loss called as the income statement. You have balance sheet, which is called as the statement of balance sheet or statement of financial position. Then you have your statement of changes in equity. Then you have your, sorry, I would rather first call first explain cash flow statement, then statement of changes in equity, and then your notes to accounts, your financial disclosures and notes to accounts. Accounting policies, disclosures and notes to accounts, the full name of it, but anyways most of them call it notes to accounts, notes to accounts. All right, so you have the five financial statements. What are those? Income statement, balance sheet, cash flow statement, changes in equity or equity statement, and notes to accounts. So now in A1, the financial statements part, we are going to talk about three components. What are the three components? A 1.1 talks about the financial statements. So you have your, who are the users of the financial statements, what are the components of each financial statement, like what is there in P&L, what is there in balance sheet, what is there in cash flow, what is there in changes in equity, and what is there in notes to accounts. So the components and the pro forma and everything about five financial statements. Then we have the limitations of each statement. What are the limitations of each of the five financial statements? Then the second part of it, A 1.2, here we talk about the consolidated financial statements prepared as per US GAAP. So now pay attention here. This is a new topic in your CMA USA Part 1 syllabus, introduced from September 2024. Before that, this topic was not covered clearly in CMA US. Some small elements are covered in investments under the A2 in second part of section A. There is something called investment, accounting of investments. There a small part of consolidation was covered there, not even consolidation, just a small introduction or a small theoretical part is there, not even numericals. But now this entire topic has been added, consolidated financial statements as per US GAAP. And then the third one is again integrated reporting. So this talks about a more comprehensive type of financial reporting. So your financial statements only talk about the numerical numbers, whereas integrated reporting talks about 6 different capitals. Like you have your physical capital, human capital, intellectual capital, financial capital, blah blah blah. So different types of capitals, and we talk about explanation of each of those in the integrated reporting. Again, this is in 2025. Still, integrated reporting is not made mandatory across the globe. It is still optional in some countries, and some countries does not even talk about integrated reporting at this point. Only few countries have pre-adopted the integrated reporting as an optional choice for the company. It's not mandatory yet because the pro forma is not finalized yet. Okay, so that is your A1, financial statements, consolidation, and integrated reporting. So these three we talk about in very much detail. Next, in A2, the second unit of section A, we talk about what? We talk about recognition, measurement, valuation, and disclosure. So basically everything related to accounting. When do we recognize? When do we de-recognize? How do we measure? Initial measurement. How do we value? Subsequent measurement. And how do we disclose them in the financial statement? So basically everything related to the each item of the financial statement. So here you can see the first we talk about A 2.1 and 2.2. We talk about assets, current assets and non-current assets. Current assets include your cash balances, bank balances, inventory, receivables, all that stuff. Then your non-current assets, then you have property, plant and equipment, your fixed assets. Then you have your intangibles, then research and development, all that stuff is covered in non-current assets. And also investments, most important one. Okay, then after that you have your liabilities and their valuation. Here we talk about debt, so borrowings and all those things, loans and all exit. Then 2.4, the most important one in entire A2, that is revenue recognition. So here we talk about IFRS 15, revenue recognition, the 5-step approach. Okay, so when a company should recognize the revenue, how much should they recognize as revenue and everything. Then you have equity transactions. So if you see here, assets, liabilities, revenue, equity. Okay, so here we talk about common stock. Sir, common stock, what is common stock? Common stock means equity share capital. In India we call it equity share capital. In US it is called as common stock. Then you have your preferred stock. What is preferred stock, sir? Now preferred stock means preference share. Preference share cap. Then you have something called as additional paid in capital. Sir, what is this now? Additional paid in cap. In India we call it as securities premium. You know, when equity shares are issued for more than their fair value, like $10 face value is there, you issued it for $15. That extra 5 is called premium, or it is also called as additional paid in capital. Okay, so all those. And at last we talk about GAAP versus IFRS. GAAP is US GAAP, generally accepted accounting policies in the US, and IFRS and their differences we'll talk about. Now let me tell you about something related to section A. Sir, we know for sure that section A covers only 15% of the overall weightage, right? Correct. So out of this, for this small 15% weightage, let me just bring up your material. Ouch. Okay, that's taking a while to load. So anyways, so section A is for 15%. Sir, for 15% weightage, this is undoubtedly the largest part of your syllabus. So if I have to really explain you in percentage terms, in terms of volume, all the 5 sections could be considered to be 70% of the volume, whereas only section A is more than 30% of the volume, maybe 60-40. I would rather go with 60-40. That much volume is there in section A. It's so huge and it's so much. Basically, let me be very honest. So you can see here 160 pages, maybe 164 or something like that, whatever it is. Let's not worry about that. But above 150 pages. So 150 pages only for one section. That is very lengthy section. Okay, so what should we do for section A, sir? How do we study for section A? And as if that is not sufficient, now they have also added consolidated financial statements. What should we do? Very simple. So don't try to become an expert on financial reporting. You are not doing diploma in IFRS course. If you want to do diploma in IFRS, talk to me. I'll guide you through that process. That is a different international certification. Anybody can do that basically. So okay, let's not talk about the IFRS, but yeah, if you are a CMA qualified and if you have sufficient work experience, you can do diploma in IFRS if you want to become specialized in accounting standards. So I did that long back, maybe in 2018 or 19. I did that, maybe 19. So it's good if you want to become an expert in IFRS. Yes, you should definitely do it, but for CMA part 1 you don't need to become an expert in IFRS to clear this exam. So, sir, what should we do? Do selective study. Sir, this is the only area of your entire CMA where I would suggest any faculty who is worth their salt would definitely suggest doing selective study for CMA Part 1 Section A. Sir, why, sir? Because this is such a huge volume for so little 15% of weightage. Okay, sir, that is all good. So how do we do selective study? What do we do? Which topics should we study? So for that, what I did is I made a separate video on that, and I actually already uploaded to YouTube. I'll also add it to your course after this lecture. Let me just pull up YouTube Global Finex. Okay, so go to youtube.com/globalfinex. Why is it taking so long? Oh, okay. All right. Then you should have a search option. Where is the search option? Not on the top. This, if you search here, it would do a universal YouTube search. Here, this search button, this is within the channel. So just search for section A topics. Okay. So you can see here CMA Part 1 Section A External Financial Reporting Decisions Topics Overview. This is a summary of what is covered in Part 1, and then after that there should be the key topics. Yes, this one, CMA US Part 1 Section A Simplified Key Topics and Laws for External Reporting Decisions. So this is what I recommend you watch this particular video to understand how to prepare for Section A. Okay, because you can see in your material I have covered it as a as a summary here. I just gave you A1 and A2 like this. So okay, so here you see A1, A2, and in A2 only these main topics are covered in the index. But if you see, actually these are all the topics which are covered in A2. Let me just scroll a little bit up, you will be able to figure it out. Sorry. Yeah. This is for A1. If I go to A2, the loss of A2, learning objective statement, see, this is all the LOS of A2. So you have so much to prepare in A2. So that is why I covered a video talking about what are the important topics and how do you approach section A1 and A2, basically entire section A. So make sure you definitely watch that, at least for your preparation purpose. Maybe not for your lectures, because for lectures you need to gain the overall knowledge and understanding of the complete syllabus. But when you want to prepare for the exam, then you should watch this video. Okay, I'll also add this video to your course after this video, after this particular lecture, so you'll be able to see it. All right, guys, I'll see you in the first topic from section A. Until then, keep smiling. Take care. Bye bye.